Hi everybody, this is the Investing Teacher, high school science teacher teaching others how to invest. In this video I'm going to go over in real time how I do option trades in terms of covered call strategy. Today is Monday, September 21st. My previous year's options did not go as exercised, so I continue to hold my shares of stock, and I'm looking into different covered call strategies for Realty Income and SPHD, which is a monthly ETF, where SPHD, I don't necessarily mind if my calls get expired, or sorry, my calls get called in and I have to sell my 100 shares. I'm looking more into holding VYM for the high yield dividend fund as well. I currently have 150 or so shares of SPHD, so I don't mind losing 100 shares. For Realty Income, on the other hand, I do like the stock and I want to keep my shares but get a little additional premium for covered calls. So I'm going to be looking quite a bit out of the money in Realty Income and likely in the money or very close to in the money for SPHD. And we'll go over in real time what the numbers look like, what my thought processes are in terms of the percent of holding them and premiums that I'll receive for it. Let's get right to it. All right, so the first resource I'm going to show you guys is cboe.com. This is where I find my option premiums in terms of price and the delta, which is the key factor that I want to look at. What we could do is look at detailed option quotes. You can enter any stock symbol and then get the information for it. So the two companies I'm looking at is Realty Income and SPHD. So let's go over SPHD first. Right now, the current price is about $33.31 to $33.35, and I'm looking at possibly October expiration dates. So at $33, we're going to look at the call side. Again, I already own 100 shares of stock, and I'm looking to sell a covered call at a certain strike price where I have to sell the 100 shares. Right now at 33, which is a little bit less than the current price, we're receiving between $85, remember you multiply by 100, so either $85 to $150 in premium. The delta is the approximate percent that the call will be exercised. So there's a 56% chance, or a little bit more than half and half, that this stock will be more than $33 by October. So if the stock actually goes a little lower than 33, let's say it goes to 32.90 or so, this would be a really good purchase to make because I would be receiving the option premium and I would hold on to my shares, right? If the stock shoots up to 40, then it would not be necessarily a very good trade because I would have to sell my shares at 33, even though it might be much higher than that. So right now with 85 to 150, the premiums are relatively high, but the delta is over 50. I personally like looking at deltas that are 30% or lower. So if you go up to the 34 premium, you get between $50 and $60, and you have a delta of about 40%. So a little bit under 50-50 that I might go to $40. The issue with this particular fund is there's not much volume. There's not a lot of people trading this particular ETF. Only nine options were actually made. There is a bit of interest. There is more interest in the 35 premium, which is a bit higher. It's about $1.70 more than the current price. You get between $30 and $40 for your premium. The delta is 0.25. So this is going to be one trade that I'm going to make is the 35 premium. I'm going to go in the lower end, probably ask $30 or $35 for this trade. Since there's a lot of interest, that means people are putting in possible prices, but they haven't been actually closed yet. I think I'd reasonably get it at 35, and I'd most likely get it at 30. If we look a month ahead of time in November, the 35 premium in November, which is 2 months later, you'd get a bigger spread from $40 to $80, which is really hard to make trades on. There is a bit of interest on it. The delta is a little bit higher because you're going another month out. So I'm going to make a trade for October at 35 and try to get a bid between $30 to $35 on it. If that doesn't get called in the next day or two, I'm probably going to go out to the November one and then lean towards the lower bid, maybe around 45 or 50. So it'll most likely get exercised. Again, I don't mind losing these 100 shares of stock because I want to put it into VYM, but I'm not willing to sell all my shares of SPHD at the current price. I'll let them sit around a bit, collect some covered call premium plus dividends, and then eventually when it does happen, I'll just put it into VYM anyway, because I like VYM more as a better long-term holding, at least in my view. Next, for Realty Income. Realty Income's at 61.43. It was a pretty big change again this morning at 1.4% down. This stock on Wednesday last week was over 65, where I sold my previous covered call on, and I was thinking that I was going to lose my 100 shares at 65. Well, actually up to 66.50 or so. Then it's been a pretty big downturn the last Thursday, Friday, and into today even. We're down to 61 already. I do want to hold these shares, so I'm going to be looking at deltas of 30 or less, because I don't want to higher than 30 delta, because then there's a good chance that I might lose my shares. Right now, the 65 call is going for $45 to $75, and there's a delta of 23, so it's about 23% chance that Realty would go to 65 or higher. These are pretty good options here. I think that there's a good chance it might go to 65. Let me go a little bit higher. You can do option range all. If we go to 67.5, there's only a 10% chance that's going to happen, but the premium is pretty low, only $20 to $25. So I might take the risk on the 65 because the delta is a bit lower, and I perceive a little bit more premium there. If you look a little bit ahead into November, again, I like looking at 30 to 60 days out in your expirations. If you go to 65 in November, you get a lot more in premium, $1 to $100 to $175, and the delta is 32%. I'd more likely take the 67.50. You get between 50 and $1 at a 20% chance of happening. So the 67.50 looks a little better in my case. The 65 is a pretty good option as well. If I was more willing to lose my shares, I'd do the 65, but I like Realty Income a lot, so I'm going to go to 67.50, and I'll make a bid about 0.6, 0.7, see if anyone bites and takes that option. If not, then I'll look at other ones. So since it's the first day that my options expired worthless and I didn't buy to close my call, I just waited for them to expire. I do have a lot of options right now on what I could do with SPHD and Realty. Next month I'll have Newt and Main Street Capital. Both of those will expire, so I could think of other options there. All of my covered call premium that I'm receiving, I'm going to be putting into VYM. VYM is a little bit underheld because I just started the position a few months ago, and essentially all the extra premiums I'm going to get will go into VYM, which I feel is a good long-term, high dividend yielding fund that will grow at about 3 to 4% in dividends, and the dividend growth rate will be about 8%. If you want to check my previous video on dividend growth calculations, you'll see exactly why I picked that. So again, I'm the investing teacher, teaching others how to invest. Like, subscribe, all that good stuff. If you have any questions on this video, I'm always available. I respond to every comment I get. So let me know, and good luck out there.